your presenter for today's presentation. I want to go ahead and say thank you to each and every one of you for allowing us to be part of your continued education growth. Ladies and gentlemen, if you could please be so kind to type in a yes into the questions section box. Just let me know you can hear my voice. That'll let me know that everything's working properly at my end, as well as everything's working properly in your end. Once again, if you could type in a yes, why yes into the questions section box, that'll let me know that everything's working properly at my end, as well as everything's working properly on your end. Okay, fantastic, fantastic. Thank you, everyone, for the confirmation of the audio as well as the visual. Welcome to the client-only presentation. The current time is 7:02 p.m. Eastern Time. Today's date is September the 6th, 2017, making today a Wednesday. Yes, a Wednesday. So this entire experience is going to last right around 90 minutes or an hour and a half. The number one goal here is to empower you utilizing the ultimate charting software to put you in a position of great abundance. Specifically, what I like to have is a goal of generating 500 pips a week. So it is Wednesday. We have today, Thursday, and Friday, 3 days if you can count today. So how many of you in this room will be happy being able to generate an extra 300 pips from now to the end of the week? Type in me, M-E, into the question section box. Okay, good, because what we're going to do is we're going to focus in on empowering you with that knowledge so that you as a trader and you as an individual will have the ability to be able to place a trade with an entry, stop, and a limit, and understand the whys behind it. If you understand the whys of why you're buying versus why you're selling, you're going to increase the opportunity of following through with the trade, which typically is the thing that holds investors back. Simply entering into a trade, having stop and limit is relatively fantastic, but you have to follow through. And understanding the concept behind what you're doing is going to put you in a position of abundance. So it's going to be my job tonight, my goal is to share with you exactly how to do that. So in front of you is a risk disclaimer. It just means that there's risk involved in trading the Forex market. You should never invest money that you cannot afford to lose. Always keep equity management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that basically means is this. We're going to show you exactly what to do step by step. One of the things that we can't do is we cannot pull the trigger for you. You have all the control over your own money. You can decide whether or not you want to place the trade or if you want to pass on the trade. We'll give you the knowledge, we'll empower you with abundance and show you the proven formula of success so that you as an investor can say, yes, I want to place the trade, or no, I do not, okay? So who am I? Well, my name is Joshua Martinez, and I'm Market Traders Institute's Director of Client Success. And I've personally taken a $500 US initial deposit investment and been able to turn it into over $39,000 US profit from it. I am a published author, international speaker, professional analyst. I've trained tens of thousands of investors from all around the world. I'm a full-time trader known throughout the Forex community as FX Pathfinder. You may have already seen me, heard of me, or read about me in the following areas: Your Trading Edge, FX Trader Magazine, Equities.com, Forex Crunch, Executive Trader, TraderPlan.com. I am the creator of the London Daybreak Strategy and the host of the Forex Mastermind program. So the end goal in mind is to share with you a strategy that can help you achieve consistent, reliable income. Now, if we put a number behind that, everyone has a different number of what they're trying to achieve. And so what I want you to do as an investor and as a trader is I want you to type into the question section box right now, what is your end goal in mind? How much of a monthly income are you trying to achieve? Type it in, I'll read them out. Matt is looking to generate $10,000 US a month. David's looking to generate a little bit over $5,000 a month. Pierre's looking to generate $15,000 a month. SRI is about $1,000, 1,000 pips per month. Danielle is looking for about $2,000 US a month. Put a number behind your goal. Doreen says 5,000. Russell says 6,000. Indir says about $5,000 a month. David says looking for about $2,000 a month. Shab says I want about $2,500 a week. ENG says $10,000 a month. James says $7,500 a month. Randy says I would be happy with right around $5,000 or $10,000 US a month. Melina, love it. $20,000 a month. I think for many of you, your goals are very fantastic goals, but I want you to consider your goals to be more of first base. One of the things about success is truly a formula. It's not a fantasy, but one of the things in which you as an investor need to understand is that the art of being a trader is focusing in on generating the pips and then allowing your funds to grow. You can always strategically increase your lot size. The trader who made $20,000 a month did basically the same amount of work as a trader who made $2,000 a month. Type in yes, why yes, if you understand that. Let's just say, for example, you make 2,000 pips in a single month, just 2,000 pips. If you traded $1 a pip, which is a mini lot, you made $2,000. If you traded a standard lot, you made $20,000. So one of the things which I want you to do is begin to think about the aspects of income. One of the neat things about the Forex market, it's a $5 trillion a day market, which means there's over $5 trillion traded back and forth within 24 hours. What that really means is think of the ocean. And you know how the ocean is just completely massive? Imagine going out there with just truckfuls and trying to pull as much water as you possibly can out of the ocean. It's going to be impossible for you to make a dent in the level of how much water is inside that ocean. What I mean by that is you can basically pull out as much money as you possibly can imagine out of the Forex market, and you still won't make a dent in the regards to the opportunity of liquidity. If you're looking to make $5,000 a month, $10,000 a month, $20,000 a month, it is absolutely 100% tangible as long as you know what you're doing. Performance matters. We are committed coaches. Doesn't matter if you're looking to make an extra $14,000 a month or $31,000 a month or simply $2,000 a week. It is your end goal in mind. You need to put a number on it, and you need to have a plan of action of how you're going to generate it. One of the simplest things that you can do is break it down in pips to say, I would like to generate this amount of pips, which would equal this amount of dollars at this lot size. Now, you may not be at that lot size. Some of you may be at mini lots or even micro lots, but that's completely 100% okay. You as an investor and you as an individual, it's important to understand how to properly compound strategically so you can reinvest and grow. The biggest thing is conserving capital. You don't want large swings. So one of the things that we're going to do to help you today in today's agenda, we're going to go through market analysis. We're going to go over finding trades, entry stops, and limits, so you're going to have complete trade plans. We're going to be discussing the ultimate charting software tools, so you kind of know what tools in which I like to use to find trading opportunities. And then we're going to try our very best to make your trading simplified by giving you an advanced way of investing into the Forex market known as Right Trader. It is a concept, way of investing into the market that is proven and that is allowing investors to achieve great success without having to spend the years and years and years of experience and execution and thousands of trades to get there. It's actually really, really neat. We'll talk about a little bit more towards the end of the presentation. Okay, so with that being said, let's jump into the live market. Let's put your success at the center of everything that we do. And I know that there are traders in this room that have a focus on what currency pairs that they are actively trading. So what I want to do is pull from the crowd. I want you in the question section box to type in what currency pairs are you currently trading, and I want you to type in buy if you're buying it, and I want you to type in sell if you are selling it. And so based upon the overall room, majority wins. So basically when you cast your response, it does give you a vote to that currency pair. The more traders trading a certain currency pair, the better chance that I'm going to be analyzing that currency, okay? So we have Rami says Australian dollar JPY buy. Victor says Aussie US dollar buy. Cerise says pound CAD buy. Steven says euro yen buy. There's no clear winner as of yet. Jude says pound NZD buy. Stan says pound CAD buy. So we got 3 votes for pound CAD. Staple says a pound US. Dick says euro yen. Clark says USD CAD. So we know that we have pound CAD as one of the currency pairs that we will be analyzing. GBP CAD, okay. We have Clark says pound NZD short. You have GUI says euro NZD short. You have Jack pound CAD. We're gonna analyze pound CAD first, Jack. FOL says pound Aussie. William says short the euro yen. Leah says euro CAD. Oh, that's a good one. Russell says pound JPY or GBP USD long. Okay. Ooh, ENG says sell the euro. Daniel says buy the euro. So we'll look at the euro US dollar as well. So let's take a look at these two at first. After we look at these two, we will then pull a third one. Okay, so let's get started. So the very first currency pair is the Great British Pound, Canadian dollar. And there's a handful of ways of analyzing the market. And there's really no wrong way. The only wrong way is the way that makes you lose money. Type in yes, why yes, if you understand that. A wrong way for you is if you try it and you lose money. That's realistically the only thing that doesn't work is what makes you lose money. If you are actively trading in the Forex market, you may be taking an approach inside of the market, and if it's making you money, it's the right way. So one of the things and the biggest suggestions in which I would promote to anybody is if you are currently generating the income that you are satisfied with, you as a person need to protect that. Do not allow anyone to tell you to change what is working. Does everybody understand that? Do not change what is working. You only generate a change of performance when the performance begins to suffer. Your job is to generate consistent pips because you know you can strategically compound and reinvest your funds. If you make 100 pips a month at a standard position, that's $1,000. At 10 standard positions, that's $10,000. At 20 standard positions, that's $20,000. If you make 2,000 pips a month, it doesn't matter what you make, you just have to be in the profit and you can strategically compound. Now, it's always a good idea to invest into your knowledge. That's always a good idea simply because it gives you the options to win when things stop working. But to make a change to improve what you're doing is a challenge inside of the Forex market because you have to protect your consistency. Type in me, M-E, if you agree that once you generate the returns in what you're wanting to make, you have to protect it. You have to make sure that you as an investor do not let anyone sway you from doing anything different other than what works. So one of the things which I would like to do is I would like to share with you what works for me. And I'd like to share with you how I educate traders from all around the world to put them into a position of great abundance. And my goal here is to not only provide you a trading opportunity, but to articulate the message to where you say, ah, that makes sense. Because if it makes sense for you, then more than likely you're going to follow through the trade and you can enter into a world of abundance. Now, excuse me, the biggest advice that I can give anybody, okay, is to keep it simple. And how do you realistically keep this simple? Here is your job, okay? Your job is not hard if you keep it simple. Your job is to buy low and sell high. That is everything in which you are trying to accomplish. Anything other than buying low and selling high contradicts what you are trying to do. That is how money is made in this market. Now, what we're going to do is dramatically increase that percentage of accuracy because many of you don't know how to utilize different time frames or comprehend different time frames to put that into your favor. So we're going to assign some ownership here. We talked about this a little bit earlier today in the Mastermind program. I want to carry the conversation over. Be that as it may, one of the things is this. If you think it is time to buy the market, ... look left. If the market has history of U-turning on that price point, you will have a high winning percent chance of winning the trade. You may want to write that down. That's probably the simplest but most effective advice that you probably ever receive, okay? Now, outside of proper equity management, that is. Now, if you look left and the market has no history of U-turns on the price point, you have a high percent chance of losing the trade. Type in done, D-O-N-E, when you've written that down, please. Type in done, D-O-N-E, into the question section box. That will signify me that you've written that down on a piece of paper. You may want to star that. You may want to copy this over. You may want to put it on your wall to look at every single day. On the upper right-hand side, you're going to see a little camera button. I would strongly suggest you exercise that camera button. I'm trying to point to it now. If you don't see it, just press escape. It might be your window's too big. If you press that camera button, what it will do is it'll automatically take a picture of what's on your screen. It will save it to your computer so you can review it later on. That is a huge help and a huge assistance for many traders. Okay, but type in done, D-O-N-E, when you have this copy down. Hey, thank you, Dick. Thank you, Russell. Thank you, Folo. Thank you, Mark. Appreciate it, my friend. Thank you, Daniel. Thank you, Danielle. Appreciate it. Thank you, Karen. Okay, perfect. Now, what do you think? If your job is to buy low or sell high, first impressions, typically you're not wrong in your first impressions. Typically you're not wrong, okay? What do you think, buy or sell? Don't just, first impressions, what do you think, buy or sell? Buy or sell, what do you think? What do you think? Buy. Yeah, look at it. Jude says buy, Greg says buy, Victor says buy, Richard says buy. Why? Why buy? Why? So if you're going to buy, why? If you don't understand why, you need to, that's going to help you follow through. Laura says because it's hitting a level of support. Theodore says I'm prepared to buy, but why? Mark says it's an indecision candlestick. Sheree says it's a low price. Jack says lots of support. So if you were to look left, if you think it's time to buy, and you bring in a line, which basically means looking left, okay, on the price point that we're pretty much on, what you have to answer is, does the market U-turn at, on, or around the price point in which the market is hitting right now? Yes or no? You tell me yes or no. Does the market have history since 2009 of U-turning over and over and over and over and over again? Couple that with the fact that the market has already fallen 2,046 pips over the last 1, 2, 3, 4, 5, going on 5 months, begins to increase the knowledge or the intuition of, hey, we are probably going to see some hesitation. Can the market keep breaking through? Maybe. There's a possibility. But if you purely look at this as an odds, how many times have the market actually touched this price point? And how many times did the market U-turn versus actually break through? So if you look at this, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times we've touched this line. Only 2 times we've actually successfully broke through the other side. So there is an 80% chance, because 8 out of 10 touches actually U-turn, which means if we were to take action and if we were to look to buy this market on a low price at a U-turn area because we looked left, we would have an 80% chance or an 8 out of 10 chance of generating income. You as an investor need to make a decision on, are those odds great enough for you to take action? So what I'm sitting here and telling you is there's an 80% chance based upon history since 2009 that this market's going to have a bullish reaction. It may not completely reverse bullish, but there should be some sort of bullish reaction. And because this is a monthly time frame, that bullish reaction could be equaled to 500 plus or more pips. These little reactions here were right around 800 pips. This reaction within 2 months was 1,000 pips. This reaction within 4 months was 1,900 pips. It would be pretty reasonable for us to expect or anticipate at least a 500 pip bullish movement simply because we're hitting this line. So my question is, would you be willing to buy this market or at least take action if the opportunity presents itself? That's the question, is would you be willing to take action? Mark says, oh, absolutely. David says, if it U-turns, if there's a U-turn, yeah, I'm not saying jump into this market buying, but what I am saying is if a buying opportunity presents itself, would you buy it? Rami says a big yes. So now let's transition into the next step. Okay, the monthly time frame. I'm not using the monthly time frame for entering in. I'm using the monthly time frame for direction. Okay. Now, if there is a buying opportunity, let's call it 500 pips, but if there is a buying opportunity for 500 pips, would you like to buy this market at a low price or would you like to buy this market at a high price? I understand it is such a generic, simple, and a silly question, but it is the most overlooked question of all that can really make the difference in your trading. Would you like to buy low or would you like to buy high? David says buy low. Pierre says buy low. Tommy says buy low. Dick says buy low. Shabley says buy low. Yeah, for sure. What time frame do you buy low on? Or what time frame do you use to know when to buy or when to wait? The next question, just because you have direction doesn't necessarily mean that when you enter into the market it's going to go your way. Because the market moves in waves, you as an investor need to understand wave movements. And you need to understand the art of the market pushing up. 500 pips is a lot of pips. And more than likely the market's not going to move 500 pips in a straight line. You as a trader need to be able to look at this market and focus in on buying low. So we're going to go to, or what I like to use is I like to use the daily time frame to serve that purpose. I'm going to go to the daily time frame, GBP CAD, daily time frame, and I'm going to show you firsthand off of the daily time frame the goal of buying low. Okay, so let's look at this Great British Pound Canadian dollar. We have a biased opinion, okay, of this market pushing up. Now, if you think, now let me answer this question first. Why do I use the daily time frame to find high prices and low prices? I want everyone to really pay attention to this, please. When the market moves, the market is going to move in waves. It will make higher highs and higher lows on the way up, and it will make lower lows and lower highs on the way down. If the market is expected to go up, the market movement would be 300 plus pips of movement here, plus 300 pips, of movement, directional movement there, 300 plus pips of directional movement on the pullback, 300 plus pips of directional movement on the way up. Let me prove that to you, okay? When you look and you see the market going down, just look how this market fell. The market fell making lower lows and lower highs. Do me a favor, type in yes if you can see that the market fell making lower lows and lower highs. It waved on the way down. Well, when the market went up from this low to this high, that was 838 pips, 838 pips. When the market fell from this high to this low, that was 921 pips. So 921 plus 921 pips. When the market pulled back from this low to this high, that's 870 pips, 870 pips. When this market fell from this high to this low, it's 1,511 pips, 1,511 pips. When the market pulls back from this low to this high, it's 1,100 pips, 1,100 pips on the way up. And if this market falls from this high to this low, it's 1,384 pips, 1,384 pips of downward movement. Now, think about this for a moment. Now that you know if the market falls, it falls 800 plus pips, market pulls back 900 pips, falls 800 pips, market falls 1,500 pips, falls 1,100 pips, falls 1,300 pips. Do you think it's worth your time to know if the market's moving from a low price to a high price, or if it's moving from a high price to a low price? Do you think it's worth your time? The monthly time frame says expect the market to go up. And the daily time frame will give you days upon days upon days of directional movement. If you want to focus in on buying the market at a low price, which is a very, very highly and a very, very intelligent thing to do, then you as an investor need to make sure that your daily time frame is at a low price so you can begin to stack the odds in your favor. Okay. Now, you think it's time to buy the market. Okay. I want to make sure everybody is paying attention. If you think it's time to buy the market, what are you going to do? You're going to look what? It's going to look what? You're going to look left. And how do you do that? You're just going to bring in a horizontal line and look left and ask yourself the question, what does the market do at this price point? So I want to ask you, does the market U-turn on this price point, yes or no? Yes. Okay. Now, couple of things. I like to look for U-turns. And when we look for U-turns, we like to use fibs, support and resistance, as well as trend lines. Okay. If you ever see a wave movement, if you ever see the market making lower lows and lower highs or higher highs and higher lows, I want you to have a default mindset of using Fibonacci's. Fibonacci's will help you count the waves. Education specialist, can you please be so kind to respond to Russell? Looks as if Russell is having an audio issue. Maybe he can just log out and log back in. Perfect, perfect, perfect. Thank you. Okay, so what we're going to do is we're going to bring in down ABCD swings. And what the Fibonacci's do for us is they will help us determine when the market can reverse. Let me walk you through how this works, okay? Whenever a D extension is fulfilled, I want you to expect a pullback. So all I want you to say is yes or no. We're going to go through this quick exercise. What we're doing is we're going to build belief and justification, okay? So number one, did the market hit the 1.618, yes or no? What do you think should happen? When a D is hit, expect a pullback, right? And a downtrend. D extension is hit, expect the market to go up. Did the market pull back? This pullback was 250 pips. Now we have our new down ABCD swing. Here's the A, okay, here's the A, there's the B. Now, if this D extension is fulfilled, I want you to expect a pullback or automatically think pullback. Let's see. Did the market hit this D extension? When a D extension is hit, expect a pullback. This pullback was a little tiny pullback, about 200 pips. So we will spread our Fibonacci's from this high to this low. This is the new D extension. If the D extension is hit, I want you to expect a pullback. Did the market hit the D extension? When a D is hit, expect a pullback. The market pulled back. This pullback was 300 pips. Type in a yes, you're starting to see a pattern between 200 and 300 pips worth of a movement. Okay, good. Now, if this D extension is hit, what do you expect should happen? A pullback. Have we hit the D yet? Have we hit that D? 1.5770. 1.5770 is the down daily D. Have we hit that level? No, we have not at all. So we're at 1.5965 minus 5770. This is 195 pips away. 195 pips away, okay? Okay. I need everyone to understand that before this market can go up, the market has every right to fall 195 pips before the rally. Now, education specialists, do you think you could reach out to SYD to see what we can do to assist them? Perfect. Okay, so how would you like to approach this? How would you like to trade this? If you are going to trade this, what do we need to do? We need to be prepared for the market to fall 195 pips before we can buy. Okay. Now, David says, but it seems like we're at support. Agreed. So here's what you do with this knowledge. If the market pushes bullish at the down D extension and we are hitting support, which should push the market up. If you start to buy the market, make sure your stop is below that D price point. Type in yes if that makes sense. It means this. Because this is a down D, we'll go to the 1 hour time frame. I'll show you exactly what to do to enter in. But if you're going to buy this market, whatever you do, do not have a stop above this D. If you have the stop above the D, you are just asking to give away your money. Because more than likely what's going to happen is we're going to spike down and then we're going to rally up. And then it's going to start to wave just like it did over here. Now, I don't know if you can see it, but this is a perfect recipe for a crown formation. Step 1, the market takes out the downtrend line. Step 2, the market takes out or meets a level of resistance. Step 3, identify the left tip. Step 4, anticipate the right tip. Does everybody see the crown? You have your left tip, center tip, right tip. According to the analysis, we're working on the center tip, and then the market should push up and then move to the right tip. Perfect. Now, no, I would not sell on the way down. Okay. What I want to do is help you understand the opportunities, which means if this market is to reverse, the movement to make money is from the center tip completion. So what we need to do is find this next bullish point, and we need to use that as our limit. And then we will expect a major pullback. That price point will be, let's go ahead and give you that price point, 6355. 1.6355 is going to be the daily bullish point. That will be the limit. 6355 minus 5964 is 391 pips. 391 pips away. Okay. This is what I want to do. I want to go to my 1 hour time frame to enter into the market. And when I get to my 1 hour time frame, I'm going to carry over only 2 price points. The daily D and the first bullish target. So we're going to GBP CAD 1 hour time frame. What does this mean? Everyone who is buying this market, you need to be prepared for a bearish push to 1.5770. What that means is if you have your stop above 1.5770, more than likely you're going to get stopped out and then the market's going to go your way. Which means that if your stop's above this, you can do one of 2 things. Number 1, chance it, or number 2, move it, or number 3, if you get stopped out, be prepared to buy in again. Okay, 1.5770 is going to be the daily down D. This is where the market should U-turn bullish. How far away was that? That was how many pips away? That was 195 pips away, 195 pips away. 195 pips away, okay? Our first target will be 1.6355, 1.6355, 1.6355, 1.6355. 1.6355 is going to be a daily bullish point, okay? This will be our limit. It's 395 pips away from current price point. Now, what we need to enter into the market buying, ideally, is this. I'm going to draw it out for you. Let the market do what is best. Let it wave. Let it make lower lows, lower highs, lower lows, then let it come up, form a high, then a low, higher than this low, and buy a counter trend line break bullish in the buy zone. I'm going to draw out specifically what you should look for. It will be a large challenge to buy the market now without having your stop below 57.70. If you buy the market now, you have no choice but to risk over 200 pips because you cannot pretend that this does not exist down here. It's more than likely going to get hit. No, I would not sell that. I would wait for it to be triggered and then the rally. You also have to remember too, the Canada just increased their interest rates, so you're going to see a little bit of a follow through of strength anyways. So just keep that in mind. Let me go ahead and draw this out. Now, once the D extension is fulfilled, then you can buy a counter trend line break bullish in the buy zone and tighten up the risk, tighten up the stop. You can buy it now, no problem. Just understand that you're going to go through about 200 pips of drawdown. Entry. Counter trend line break bullish in the buy zone after the market hits the down daily D. Okay? Stop. 10 pips below low of U-turn. What I want to do is I want to make this blue, so there's no confusion what the target is. We'll bring in the stop, 10 pips below the low U-turn, 36.26, okay? And we're going to have our limit to be 395 pips. So your expectation of your risk will be every bit of, in this scenario, is going to be right around 100 pips. Your reward will be right around 400 pips. So it's a 1 to 4 risk versus reward. It's going to be hard to judge if we can get a smaller risk just simply because we're coming off such a large candlestick. But if volatility or wavements simmer down a little bit, we can probably find a trade under 100 pips worth of risk. Go ahead and type in done, D-O-N-E, when you have this copied down. Type in done, D-O-N-E, when you have this copied down. One of the things in which I'm getting questions of, hey Josh, what if it goes up now? I'm telling you, if you want to buy the market, you're going to have to place your stop below that daily D. According to the percentages, the market should fall before it rallies. Now, here's the process, okay? You as a trader need to train your brain to view opportunities differently. Type in done, D-O-N-E, when you have this copied down. We'll move on to the next currency pair. But you as a trader need to change or train your brain to view opportunities differently. Why? What do I mean by that? Well, excuse me, what I mean by that is very simple. Instead of trying to win every single trade, which is such a difficult, stressful task, what you simply need to do and say is this: if I were to see this opportunity 100 times, what would the market do most, and am I doing that? If you can confidently say, yes, you are trading the direction of what the market does most, then in return, you should win more trades, and you should generate more money, and you should have less risk. But if you're trying to guess if the market's moving in the winning percent or the losing percent, and you're trying to make plans on generating income just off that one trade, consistency will be hard. See, as an investor, you have to understand that losing trades is a part of the process. Losing trades is not the end goal in mind. Losing money is not the end goal in mind, but losing trades is a part of the process. You place 10 trades, you win 7, you lose 3. You place 10 trades, you win 8, you lose 2. You place 10 trades, you win 6, you lose 4. You place 10 trades, you win 7, you lose 3. Losing is a part of the process. It's how you lose versus how you win, which makes the difference between great traders and just okay traders. Type in done, D-O-N-E, when you have this copied down. It is your decision on whether or not you want to eliminate risk or go through the drawdown, okay? Suli says, what is 5768? I don't know what 5768 is. I don't have anything right there. 5768. No, 5768. I don't have anything right there. Okay. So, entry. So, counter trend line break. An example. Let's just say, for whatever reason, you were expecting the market to go up. And let's just say that this was a live market. A counter trend line simply means when the market goes against the direction in which you are trying to trade. In this scenario, we're trying to trade bullish. And let's just say the market was dipping bearish like it is here. That is considered a short-term move. You'd bring in a trend line to measure the short-term move, otherwise known as a counter trend line, because it is a trend that counters the direction. When or if the market closes above your counter trend line, it signifies that the short-term move is over and the long-term move is taking control. Typically what happens is it allows you and gives you the opportunity to enter in the market buying, eliminating the drawdown and taking the profits. Type in yes, why yes, if that makes a little bit more sense. When I say wait for your counter trend line break, wait for the market to break a counter trend line, and then buy it, because this is what we're looking for. We're looking for that same exact example, just over here. We're going to let the market hit the D extension first, and then buy the counter trend line break that is to follow. Okay, second currency pair on deck, which was requested, was the euro US dollar. We're going to go a little bit faster on this one, okay? And so I want to make sure everyone's thoroughly educated. I want to make sure everyone thoroughly understands the purpose of everything that we do. We look at the monthly time frame to accomplish one thing and one thing only. What do we use the monthly time frame for? What is the monthly time frame for? What are we trying to accomplish? Monthly equals what? Monthly equals, David nailed it, Tabitha nailed it, Beth nailed it, Sam nailed it, Matt's nailed it. Right. It's monthly equals direction. We are assigning the ownership of the monthly time frame to give us direction. Now, specifically, we're utilizing a couple tools that are offered by the Ultimate Charting software. We are looking specifically for U-turns, and we're using Fibonacci's, we're using trend lines, and we're using support and resistance. Okay? These are tools which are very, very powerful if you understand them correctly. Now, you need to understand monthly time frames will provide you the highest winning percent pattern. It will give you the ability and the opportunity, to find where the market U-turns. Excuse me. Now, just take a moment and just look at the euro US dollar. Bingo. When the market touches the bottom blue level, the market U-turns. When the market touches the bottom blue level, it begins to travel to the top blue level. My question to you, being a trader is all about finding patterns. If you were to buy the market at the bottom blue level and take the ride to the top blue level, could you have been successful? Yes or no? Now, if this market is completing the pattern in which has been around since 2005, U-turn, 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 and the market's on its way towards the top blue level, the question is, does the market move in straight lines or does the market move in waves? And what I mean by that is, if this market's going to complete, if the market's going to complete the movement, is it going to pull back and then go forward, or is it going to just continue forward? Now, if you think this market moves in waves, type in waves. If you think it moves in straight lines, type in straight lines. Debbie says waves, David says waves, Dick says waves, Russell says waves, Pierre says waves. I'm referring to percentage. If you look at the market, what does the market do most? Your job as an investor is to look at the market and answer that question. What does it do most, and are you going to trade in that direction? For the most part, the market moves in waves. And so, if that's the case, well, we have to answer, is there any sort of justification of a high forming now? What do we need to do to answer that question? What do you think? Look left. Look left. And if you look left, your job is to buy low and sell high. And specifically, if you think it's time to sell, the market needs to U-turn on that price point. And if the market has history of U-turning on that price point, you will probably win your trade. So when I bring in a horizontal line and I put it on the price point and I look left, I want to ask you, do we have history of U-turning on this price point? Yes or no? Yes or no? Let's run the odds, okay? Let's run the odds. 1, 2, 3, 4, 5, 6, 7. So we had 7 touches. 1, 2 breakthroughs, 5 U-turns, 5 U-turns, 2 breaks. Okay? What is the U-turn percentage? 5 divided by 7 equals a 71% U-turn rate. 71%. Okay? 29%. So here's the question you have to ask yourself. There is a 71% chance the market's going to form a high and retrace. Would you like to look to sell the market, bearish, because there's a 71% chance of the market falling based upon data since 2003, or would you like to buy the market, which you have a 29% chance? Type in buy if you want to try to trade in the direction that has a 29% chance of winning, or type in sell if you want to trade in the direction that has a 71% chance of winning. What would you like to do? You don't have to place a trade, but what would you want to do? Matt says, I want to sell. George says, I want to sell. David says, I want to sell. Peter says, I want to sell. Catherine says, I want to sell. Dick says, I want to sell. Right. Because if you want to win your trade in the long run, and if you were to see this 100 times, you would win more trades selling than you would be buying. Now, if you are going to sell, you basically want to find an area of U-turn or resistance becoming support to help you. Typically, all you're going to do is you're going to find where the market likes to U-turn on the opposite side. So we bring in a line, okay, and we notate the price point, 1520, 1.1520 is going to be the monthly support. That is our opportunity. If you and I were to sell this market bearish right now, which we have a 71% chance of winning if we do, then we want to take the trade to at least, to be conservative, to this blue line, because this blue line is where the market hesitates. You have a U-turn, 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 U-turn. More than likely the market's going to touch that because that's where it U-turns. 1520 minus 1925, that's about 405 pips away. So we make that our limit, 405 pips away. If you're going to sell this for 400 pips, do you want to sell high or do you want to sell low? And what time frame do you use? Well, based upon everything what you're learning this evening, you should realistically be looking at the daily time frame, and you should be looking for a high price to sell high. Now, we're going to notate and we're going to mark 1.1520, 1.1520 will be monthly support, make that our limit, 405 pips away. Now, what we have to answer and what we have to find is it time to sell? Here's a very straightforward concept. We do not have an abundant amount of history when we look left of U-turns. Type in yes if you can clearly see that we do not have an abundant amount of history of U-turns on the left of the price point we're hitting now. We have it on the monthly time frame, not on the daily, which means instead of trying to sell the market now, you're going to want to wait for the market to change its pattern. The market is still making higher highs and higher lows. You are smart enough to know to stop buying, but we have to wait for the market to crown. And if the market crowns and gives us and takes out a low, a past low. So if you're selling this market now, you're selling it a little bit premature. If you're buying this market now, you need to understand buying's basically over, unless you think the market's not going to respect the boundaries, which we just saw it did since 2003. More than likely what's going to happen is the markets are going to create some sort of Fibonacci wave movement on the way down. What we need to do is we need to wait for the market to give you a crown. So what I need to do is type out and say, market is too high to, market is still making higher highs and higher lows. I need to wait to sell a high price in a down trend. Okay, let me give you a prime example. The market was making lower lows and lower highs, and then the market did this: left tip, center tip, right tip. This is what you want. You want to buy the market there, because that is symmetrical to your left tip. And watch what happens. Market goes up. Type in a yes if you can clearly see the crown formation that formed when the market transitioned from moving from the bear control to the bull control. We're not asking for this market to do anything that it hasn't already done. This market is used to moving in waves. It's designed that way. And so the reality of this is we're just looking for this market to repeat history. And as the market moves, it makes higher highs and higher lows on the way up. And as it falls, it makes lower lows and lower highs on the way down. We're in the prime position for the market to fall, but we do not have evidence of the reversal. The reason why we wait for that evidence is to protect ourselves from drawdown. Type in done, D-O-N-E, when you have this copied down. Type in done, D-O-N-E, when you have this copied down. Okay. Now, do you feel empowered? Do you feel like you learned something tonight? Do you feel, as an investor, that you are walking away with some strong takeaways? We reviewed ownership. We reviewed larger time frames, we reviewed smaller time frames, we reviewed trading opportunities. We analyzed the currency pairs that were requested by the room. One of the strong trading opportunities that we have is the Great British Pound Canadian Dollar Long. If the market hits the D extension, opens the door to about 400 pips towards the north. We discussed the importance of utilizing Fibonacci's, trend lines, and support and resistance, as well as multiple time frames, and showed you the mixture of what works very, very well. The bigger question that has to be asked is, would you like to learn a simpler way of finding trades? What I mean by that is, would you as an investor like to lean on technology to give you the competitive edge to have a 70+% winning ratio, to have the ability to make 1,000 to 2,000 pips a month, to have the ability to turn on your computer and not have to go through what I just did? It took me an hour to go through 2 currency pairs, and we had one great trade and we had one future great trade. But for those of you at home, you need to ask yourself, is how long would that have taken you to do on your own? And does that fit your current lifestyle? If the answer is, it takes a long time for me to do exactly what you did, and I probably wouldn't even have the confidence that you would have, you may be interested in an alternative solution. Type in me, M-E, if you'd like for me to share with you a strategy that could possibly make your trading life very simple, very straightforward, take that frustration and anxiety away. Maybe we can show you how to eliminate some risk along the way, and just have a formula and a trade plan that works for you. You finally have that strategy that says, gosh, this actually works, and I'm making money. And I'm not just making money today, I'm making money today and tomorrow and this week and this month and this year. Well, it's not just a strategy. I want to share with you the story behind the strategy, because I think it's very, very interesting. One of the exciting news that we have is, as a team, we have become very, very strong, and we have enhanced our knowledge tremendously by adding this individual to our team. Type in yes, why yes, if you know who Christopher Pulver is. Type in no, N-O, if you do not. Type in yes, why yes, if you know who Christopher Pulver is. Type in no, N-O, if you do not. Yeah, we have no problem. We can look at that currency pair. George says no. Rami says no. Matt says yes. I knew you'd know who Chris is, Matt. Stan says yes. John says yes. Ellen says no. Okay, so let me introduce Chris, and I'm going to give you a nice story. Okay, it's actually pretty funny. So Christopher Pulver has 9+ years of Forex trading experience. And he is Market Traders Institute's senior currency strategist. Now, he has been a guest speaker and personally been invited to speak at the Money Show and Trade Expos. As you know, if you're on the circuit, you know those are relatively large trading events. Those are like big, giant, 3-day, a week-long events where like tens of thousands and hundreds of thousands of people go through. It's actually a really, really big deal. He's a published author at FX Street, Investopedia, Equities.com, FXTC magazines, and several others. And what's very, very impressive about him is his track record. See, Chris wins 70+% of his closed positions and has a 2.86 profit factor, which is extremely impressive in regards to risk versus reward. But one of the things which I want to do is talk about the story of Chris. So I've known Chris for years and years and years and years. And actually, Chris is a very, very great investor and a really, really great trader. And our styles and methodologies are very similar to one another. Chris was, type in me, M-E, if you have target trading. Type in me, M-E, if you are part of the target trading family. That's Peter, that's Jonathan, that's Deborah, yeah, a lot of you. That's Matt, that's Karen, that's Jacqueline. Well, so a handful of years ago, I think it was like 3 or 4 years ago, Chris came to us and he showed me targets because we were talking with each other and we're talking about the way that we were trading. And Chris said, hey, you know, Josh, I want to show you this strategy. And it wins like 70–80% of the time. And so right away, red flags came up, and I said, Chris, I said, come on, man. I said, you know, that's, you know, hokey pokey. Nobody wins 70–80% of the time. And by that time, I was only winning like 55% of my trades. And so for me as an investor, having a strategy that wins 70+% was very, very challenging to believe. Well, Chris says, no, I got to show this to you. So he showed it to me, and I said, Chris, this is so good. If this really is that great, what I want you to do is I want you to go do it. I want you to use your own money to do it. And he said, okay. So he did it for like a month or 2 months, and he showed me his results, and he was winning 70+% of his trades and making a tremendous amount of money. So I said, okay, I'll give it a shot. So I started utilizing it, incorporating into my strategy, and behold, I started winning 70+% of my trades. And I thought, man, this thing is incredible. So then we brought it to the student body, and as you know, target trading, if you are a target trader, it's really one of the most impressive aspects. So Chris Pulver, this gentleman, is the individual who brought target trading to Market Traders Institute. And so if it wasn't for him, we would not have that aspect or that revenue or that avenue to be able to generate revenue as traders. You see, there are traders who are generating 1,000, 2,000, 3,000 plus pips consistently a month using targets. Now, in my opinion, targets is one of the cream of the crops, and one of the target trading in general is probably one of the best strategies out there. But it happened again. And what do I mean by that? Well, Chris came to us and said, I got another strategy. And we said, okay. And he goes, and this thing wins, and this thing works. And I know, Josh, I kind of know how you are, so here's my track record. Type in a yes, why yes, if you as an investor can see the track record of performance that shows a 70+% win and a 2.86 profit factor. Type in a yes, why yes, if you see that graph down there. This thing is smooth, and what we love about this track record is the lack of drawdown. Now, what do I mean by that? Well, one of the things in which hinders traders, and one of the things which prevents investors from being successful, is them freaking out when the market goes against them. Type in me, M-E, if you're in the room and you're kind of like, Josh, yeah, I freak out when the market goes against me, especially when I am a little bit lot heavy. When I'm very, very confident about a trade and I kind of add a little bit too much and then it goes against me, I emotionally freak out, and then I make emotional decisions which ultimately causes me to lose more money. Okay, so when Chris came and he said, I have a strategy, well, we listened because he has a strong track record because he brought target trading. And he says, look at this track record and look at the lack of drawdown. This wins 70+% thus far because based upon his performance, and has a 2.86 profit factor. And what I would like to do is I would like to educate investors how this works. So is that okay? We'll see if traders are interested. So we're going to let 100 traders try this out. But I'm not going to give you the opportunity to enroll because you need to know what it is and you need to know how it works. Okay, but if you love target trading, then you kind of have the idea of the performance opportunities that Chris brings to the table. So before I go any further, I just want to ask you, type in me, M-E, into the question section box if you would like for me to share with you a strategy that is easy to use, easy to execute, and easy to obey that has allowed Chris to win 70+% of his trades, to where you can turn on your computer, open up your charts, find direction, find a trade, begin to eliminate risk, and lock in profit. Type in me, M-E, if you want me to share with you how that works. Now, will this be for everybody? No, I already told you. We're only going to let 100 traders try this out, just like what we did with targets. There's no difference than how we approach this with targets. But as you know, targets works very, very well. So what I would like to do is walk you through how this works. Now, are there restrictions? No, this works for any currency pair. in any time frame. And some of you may have already seen this, but it's called Right Trader. And what I want to do is look at this some very, very popular currencies. As you know, many of you, I am looking at a handful of currency pairs. We're going to pull up some very, very popular ones. We're going to pull up the Great British Pound NZD first, GBP NZD. We're going to analyze as many currency pairs as we possibly can. Again, you can use this on larger time frames and smaller time frames. I like a 1 hour time frame, so I'm going to educate you on a 1 hour time frame. And what I would like to do is approach this into two ways, okay? Now, Chris has a vision on how he's going to educate you, and what he knows is he's very, very methodical and very, very well thought out in regards to how he places trades. But one of the things in which I want to do is teach you two strategies, and I want to teach them to you right now. And I'm going to teach you a strategy that's going to be conservative, that you receive an entry, a stop, and a limit. You enter in, and you either get stopped out or limited out. The conservative approach will be fantastic for the busy trader who needs to find a trade and then walk away. Now, I'm also going to teach you an aggressive approach. And the aggressive trader is going to be the trader who has an entry and a stop but no limit. We're going to strategically teach you how to eliminate risk. Question before we go any further. Type in ME, M-E, if you would just love to learn a structured way of being able to move your stop appropriately, to bring it to break even appropriately, and then effectively lock in profits to where if you were to get stopped out, you're getting stopped out making money. Type in ME if you want to learn how that works. Well, if that's you, you're going to really need to pay attention to this approach, okay? Because this works. And as you can see, results speak for themselves. So here's the deal. You have a shaded color, and then you have a non-shaded color. The shaded color is sell zone. The non-shaded color is the buy zone. So I just want to make sure that everybody can read this properly, because what we need is you need to find direction fast. You can't be hokey poking this. You can't be sitting here wondering if it's going up or going down. Are we in the buy zone or are we in the sell zone? Type in buy if you think we're in the buy zone. Type in sell if you think we're in the sell zone. If the candlesticks are in the sell zone, then you need to be looking to sell the market. If the candlesticks are in the buy zone, you need to be looking to buy the market. But I need to make sure that you as an investor can read this properly. Yeah, the market's inside of the buy zone. And so right away, I need you to understand that you're viewing this and you're obtaining direction fast. You're not having to mess with larger time frames. You literally turn this on, you look at your time frame, and you are in the buy zone. Now, there's two candles. You have a blue candle and you have a red candle. Blue is when we want you to buy. Red is when we want you to sell. We want you to buy the blue candle in the buy zone, and we want you to sell the red candle in the sell zone. Type in yes, why yes, if you understand that. You're in the buy zone, you're blue, we want you to buy. We're in the sell zone, we're red, we want you to sell. Okay? Now, how you follow through and the focus of this is going to make this extremely unique to something in which we don't normally do, which we're very, very excited about. We're going to teach you how to structurally move your stop losses so that you can, as an investor and as a trader, to be able to lock in profits and eliminate risk as fast as possible. So let's just face it. If you were able to eliminate risk fast, then you as a trader will have the ability to focus in on what's most important, which is winning the trade. Many of you, what happens is this. You're in a trade, it goes against you, you emotionally freak out, you close the position, you take a loss, and then what happens? The market just goes your original direction. We need to eliminate that fear. This is how we do this. I want to walk through this, okay? Now watch. Type in yes if you can see that this is a blue candlestick and we are now in the buy zone. Okay, type in yes if you can see this. Okay, I want you to buy the market. I want you to enter in long, and I want you to enter in the market going up. Okay, now here is where your stop goes. Stop. 10 pips below last low of U-turn. I do not want you to have crazy, ridiculous stops, okay? That's not what this is about. We want you to have a proper risk tolerance, which will give you the competitive edge as an investor to be successful. And so what we're going to do is we are going to help you eliminate as much risk as we possibly can so that you as a trader will be put into a position of abundance. Now, how we do this is we're going to help you eliminate risk, okay? So your stop loss of being 10 pips below the last low U-turn is temporary, okay? This is your aggressive approach, okay? Now, this is 600 and this is 7590. Now, this is what I want you to do. Here's your buy, and let's just make it simple and call the trade 76.85. I want you to mark 40 pips. Okay? So watch this. 76.85. So we're going to take 76.85, 7685 plus 40. 1.7725. Okay? Then you're going to do the same thing. It's all going to make sense in a moment. By the way, all this can be done automatically with your broker. It's actually really simple. All this is going to make sense in just a moment. Then we're going to mark 1.7765. Okay. Then we're going to mark and notate plus 40. 1.7805. So we use those first three. This is how this works. Really pay attention. I do not want you to miss a single thing. Okay. The blue line represents 40 pips in profit. Okay. We're going to mark 3 points at first. Now, this is going to be P1, P1. This is going to be P2, and this is going to be P3. Okay. If the market touches P1, I want you to move your stop to break even. Type in yes, why yes, you understand that. If the market touches P1, I want you to move your stop to break even. Type in yes, why yes, you understand that. Okay, so let's see what happens. Did the market touch P1? Yes or no? Did the market touch P1? Yes or no? Did it do it? Yes, it did. So we move our stop to break even. Now, you can have what's called a fixed trailing stop, which can do this automatically for you. If the market moves to P2, I want you to move your stop to P1. Okay? Now, let's see what happens. Did the market touch P2? Did the market touch P2? Yes or no? Yes. So move your stop to P1. Now, if the market touches P1, we will lose making 40 pips. We will lose making 40 pips. Did we fall down and touch our stop? Yes. So we just lost. We got stopped out, making 40 pips. Type in ME if you love the idea of taking a losing trade or having your stop being hit and generating 40 pips of profit. It's actually really, really impressive. It's Pretty darn incredible. Now, as a trader, one of the things that what you're going to want to do is you're going to want to make sure that you're put into a position of abundance. And so one of the things what you're going to want to do is press what's called the reset button. And pressing the reset button just simply means you close your areas and you basically say, okay, well, you know, I'm done. But you want to be able to re-enter in as soon as you can, but effective. Now, one of the things what you need to understand is that the market moves in waves. The market doesn't move in straight lines. So one of the things what you want you to do for re-entry opportunities, now Chris is going to teach you different aspects and different avenues of re-entering in and different rules. But one of the things which I want to encourage you to use is what's called a counter trend line. And a counter trend line is very simple. It just basically means that when the market has a short-term bearish movement, in this scenario we're blue, we're in the buy zone, short-term bearish movement, you bring in a line. If it breaks above that line, I want you to buy the market again. So you're going to enter in the market buying. Now you're going to place your stop 10 pips below the last low of U-turn. And you want to utilize the last low of U-turn. Okay, it's very, very important that you do that. If you try to have a stop that's too tight, it's not going to work. Okay, if you have a stop that's too tight, this will not work. So you're not going to want to use the U-turn in which you entered in on. You're going to want to use the last U-turn, because if this market is indeed going to make, listen, when the market moves in waves. Okay, and if the market's going to make higher highs and higher lows, if you place your stop below the previous low, it gives you the highest winning % chance of not getting not buying the market during the retracement, because sometimes you can buy the market during the retracement or in the middle of the retracement. As long as you're stopped below the last low U-turn, you can survive the drawdown, then it goes your way. Type in yes if that makes a little bit of sense. So we're going to educate you on how to appropriately manage high prices, low prices into your favor when you do this. Now, the neat thing about this is in this scenario, our stop is really not that far away. It's very, very conservative, okay, 65, 55. Now, again, if the market goes your way 40 pips, what do we want you to do? Okay, 52, so we're going to go 52, we're going to mark 52, so we're going to mark 1.7792. And we're going to duplicate that. We're going to say, well, another 40 pips, and we're going to say 1.7832, okay? And then we're going to do one more time, and you as an investor can go so we did 1.7832, so we can go 1.7872. I move that there. So 1.7832, 1.78, 1.7832. And I'm going to mark those in blue lines because those are going to be the areas where we can take our profits, we can move our positions. So that's 1, that's 2, that's 3. Let's go ahead and see what happens, okay? So let's go ahead and delete this, delete, delete, delete. Let's see what takes place. Market begins to move. Higher highs and higher lows begin the waves. We did not call the entry right at the low U-turn. That's okay. Did the market hit the first blue line? Yes or no? Did the market hit the first blue line? Yes or no? Well, it's close. Very, very close. Very, 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 very close. Let's just call that a hit. We'll call it a hit. What do you do? What do? You move your stop to where? To break even. The worst case scenario, and what will happen, is you will get stopped out making 0 pips, and you will get stopped out losing 0 pips. So let's see what happens. We got stopped out. There it is. We got stopped out. So we lost 0 pips. So the question really comes down and saying, do you believe that as a trader, what if when you got stopped out, you lost 0 pips. Maybe not all your losses, but what if you turned 70% of your losing trades into potential winning trades, or at least break-even trades? Do you think that would make a difference between your success and failure as an investor? Do you think that would make a difference between your success and failure as a trader? Yeah, hands down. Hands down. Okay, so what that is, that's going to be an aggressive approach. See, the aggressive trader is the type of trader who goes after home runs. I don't want to say home runs, but what they're doing is they are canceling, replacing, they're monitoring the wave movements. We're going to strategically teach you how to amplify and utilize multiple entries in your favor. But there is also a conservative approach to trading. And the conservative approach to trading just basically means you have an entry, you have a stop, and you have a limit. And it's a little bit more methodical. And what it is for the investor who's relatively busy. Not every trader has the ability to move forward, canceling, replacing their stops. And so one of the things which I want to do is I want to ask you in the room, as an investor and as a trader, how many of you would like the idea of entering into the market, placing an entry, placing a stop, placing a limit, walking away, and then coming back and making profit and having a 70+% strike rate? How many of you like that? You'd just be like, Josh, if you could just do that, that would just open the world. That would open the opportunities. That would open my eyes. And if it actually works, then you know what? I would hug you and you would have to fight me because I'm probably going to kiss you. Well, let me show you how that works, okay? Now, again, in the buy zone, okay, don't make this overly complicated. You're in the buy zone. You bring in a counter trend line. The market breaks your counter trend line. You buy the market. You place your stop. How many pips below the last low U-turn? How many pips below the last low U-turn? How many pips do you place it? 10 pips below last low U-turn. So your stop is 10 pips below last low of U-turn. Doesn't kill you, okay? Doesn't kill you. But in this scenario, what you're going to do is you're going to go after what's called the next bullish point, okay? And what you're going to do is you're going to give yourself the competitive edge and the ability to maximize your returns. Because as you know, the market moves in waves, and for the market to move in a wave, the market has to go after a bullish point, okay? So in this scenario, your limit will be the next bullish point. Now, some investors will have the ability to lock in profit and take the more aggressive approach, which you can absolutely do. But for the most of you who enter in the market buying, and then the market begins to go your way, type in yes if you can see that the market scored the bullish point. Well, in this bullish point, that's 147 pips. So you just generated 147 pips, 147 pips thus far. Now, here is what I would like to highlight out above and beyond everything else, okay? Now, what does that mean? Well, I would like to highlight the fact that this way of investing has very, very little drawdown. Drawdown means when the market goes against you. Drawdown means that when the trade is in the red. You know when you turn on your computer and you turn on your chart and you look at your broker and your broker shows negative money and you're kind of like, ah, dang it, you know, you get frustrated, you get aggravated, then you look at your chart and then you look at the money, you look at the chart, and you look at the money, you're kind of like, why is this not U-turning? Why is this not in the profit? If you can learn how to structurally move your stop effectively to lock in profits, type in yes, why yes, if that could change a few things in your results. Listen, this isn't for everybody. We're not going to let everybody do this. We're going to let 100 traders try this out. That's all we're doing, letting 100 traders. So if this isn't for you, that's okay. You know, that's quite all right. But for the most people in this room who are saying, God, if I can eliminate risk, if I could just focus in on profit, that could really make a big difference in my overall trading results. Now, what I want to share with you is a visual view. And I just want to put things into perspective, okay? If we zoom out here and we focused in and just said, listen, if you bought the market when it was blue and above, or when it turned blue and above, could you win 100% of your trades? No, but could you win the majority of your trades? Yes. Here's a buy, there's a buy, there's a buy, there's a buy, and there's a buy. Every one of these trades besides one would have generated profits. Along the way, we are going to strategically teach you how to re-enter in appropriately, maximizing and utilizing what's known as counter trendline breaks, which will give you ample opportunities and really is to exercise for the investor who is very busy. Okay, give me another currency pair. I kind of shared with you a currency pair that I like to trade. Many of you who know me, you know I like to trade the pounds. Why don't you give me a currency pair that you like to trade? Like I said, this will work on any currency pair, any time frame, doesn't really matter. It's literally what you see is what you get. You learn how to eliminate risk. You learn how to lock in profit. So type into the question section box what you want to see. David says Aussie NZD. And Carol says Euro NZD. Deepak says Euro Aussie. Arthur says USD CAD. It's going to be majority rules. Dean says Pound US. Catherine says Euro NZD. Deepak says what any of the AUDs. It's going to be majority rules. Caroline says Euro NZD. Okay, let's. Cynthia says Euro NZD. Harry says Euro NZD. Let's look at the Euro NZD. Okay, so we pull this up. EUR NZD. EUR NZD. We'll pull up a 1 hour time frame. I like a 1 hour time frame. You can do larger time frames, you can do smaller time frames, but I like a 1 hour time frame. And when we pull this up, and I don't like that scroll bar. Many traders like it, but I don't like it. The question is, are we in the buy zone or are we in the sell zone? Right now we're in the buy zone. So we just came off some really three fantastic runs. A nice push up, a little push down. A nice push up, a little push down. Let's walk through the process of being an aggressive trader versus being a conservative trader. So I want everyone to pretend for just a moment you just turned on your computer. You're in the buy zone. This is what you see. You have a choice. You can utilize an entry, utilize a stop, and utilize a limit. That's more of a conservative approach. Or you can take an aggressive approach and utilize an entry and just a stop and master canceling and replacing. What I want you to do is type in limit or no limit. What would you like to do? Would you like to trade with a limit? Or would you like to trade with no limit and master canceling and replacing? What would you like to do? David says, I would like to trade with a limit. George says, I would like to trade with no limit. Peter says, I want to trade with no limit. David says, I want to trade with a limit. Okay, let's see who would win. Let's take a conservative approach first, okay? So both entries, you have a market buy because you're in the buy zone. So this is your buy. Your stop for both are exactly the same. Your stop is 10 pips below the previous low U-turn, okay? So it's previous low U-turn, which is 38.28. If you are a conservative trader, you're going after the next bullish point. This is your limit. Let's see what happens for the conservative trader. You enter the market buying, and you hit your limit. You're done. So you hit your limit, you make 132 pips. If You entered into the market buying. You had a stop and a limit. You walked away. You went to bed. You woke up the next morning and you were positive 132 pips. Would you be happy? Yes or no? Would you be happy? Would that make you a happy person? Yes or no? Excuse me. George says yes. Arthur says yes. Excuse me. Caroline says yes. Okay. Let's keep going. If you are a conservative trader, what would you do? Well, you would then basically leave this alone. You're done. You got to wait for the next kind of trend line break. If you are an aggressive trader, what do you do? Well, we're going to do this a little bit faster. We're going to eyeball this one because of time. We're going to be respectful for everyone's time. You're going to enter into the market buying. If it goes your way, 40 pips, what do you do with your stop? If it goes your way, 40 pips, what do you do with your stop? 40 pips is going to be basically 61.60. What do you do with your stop? If it goes your way, 40 pips, what do you do with your stop? You move it to break even. Let's see what happens. Bingo. Went your way, 40 pips. You move your stop to break even. You now have eliminated all of your risk. You have eliminated all your risks. Worst case scenario, market falls down and you lose nothing. Market falls down, you lose nothing. So you get stopped out plus minus 0 pips. What do you do when that happens? How do you enter back in? I want to make sure you thoroughly understand. Listen, for many of you in this room, when you do this, I want you to make sure that you understand the rules so that you can begin to generate an income and lock in the profits. How do you enter back in? You just got stopped out. You're in the buy zone, you're blue. How do you enter back in? How do you enter back in? George nailed it. You wait for a counter trend line break bullish in the buy zone. So when you enter in the market, we bring in your counter trend line. We entered in the market buying. That's your buy. You place your stop 10 pips below the last low U-turn. Okay, 40, 30. And if the market goes your way 40 pips, you lock in your profit. 6171, 6171. There you go. That's your 40 pip mark. Okay. Let's see what happens. Market pushed 40 pips. Your stop goes to break even. Did the market push another 40 pips? Well, yes, it did. So the market pushed another 40 pips. Your stop goes to break even. Now, if the market goes against you, the worst case scenario is you're going to get stopped out making 40 pips. Did the market go your way another 40 pips? Yes, it did. So 62, 62. So you lock in your pips. Okay? So worst case scenario, you get stopped out making 80 pips. If the market goes your way another 40 pips, you lock it in, 63.02. So we're going to 63.02. Let's see what happens. It goes another 40 pips. So we're going to go 62.60. Okay? Now, in this scenario, if you get stopped out, you get stopped out losing 120 pips. 6,300. We're going to go 63.40. Goes to 63.40. This gets bumped out to 6,300. Now, if you get stopped out, if the market comes down, you're going to get stopped out making 100 pips. So if stop is hit, you will make 160 pips. Can it go any further? Now, what's really neat about this is this aspect of trading can automatically move your stops. Type in yes if you can clearly see that we just got our stop hit, and because of the approach in which we took, we generated 160 pips for being stopped out. That's fantastic, okay? I love it. That's fantastic. Okay, 160 pips, you really can't complain about that. But what I love even more, above anything else, is the fact that what? Did we get into the drawdown? Did we have a negative position? Did the market go against us? Did we lose profit? How many of you feel that you could function with such confidence and have a clear mind, having the ability to eliminate your risk, and just having the fact of just taking that stress off the table to allowing you to focus in on everything in which you want to focus in on, which is just profit. And just to make sure that you understand that we're not cherry picking these trades, that these are currency pairs in which you asked for and voted on, you could have continued on trading this, and it works, and it works, and it works, and it works, and it works. Type in a yes if you can clearly see that we could keep going all night long, and these are really fantastic buying opportunities. You could bring in counter trend line breaks for re-entries. You could turn on your computer. The biggest thing is that this works off of one time frame. This works off of any currency pair, any time frame that you choose. You don't have to bring in all these technical analysis. You just have to use a proven methodology. You're going to learn this from a very, very seasoned investor and a very, very experienced trader who has been utilizing this with a profit factor and a proven track record of 2.86 and a 70+% win on closed positions. Now, before I end the night and before I walk away, what I want you to do is I want you to type in me, M-E, into the question section box. If you would like for me to share with you the details of how this program works so that you can make an empowerment decision to decide whether or not you want to be one of the 100 traders that participate. Again, like I stated before, just like when Chris Pulver brought target trading, we only let 100 traders to utilize that first. And then based upon the success or failure, we opened it up. The fact of the matter is this has a proven track record of success, and we believe that investors are going to be extremely successful with this. Why? We're entering into the end of the year, ladies and gentlemen. Volatility is starting to spike up, and this is a fantastic strategy to lock in profits, eliminate risk, and put yourself in a position of abundance. You as an individual just need to make a decision on whether or not you want to participate. So what are the expectations if you do this? Well, you're going to make more money, you're going to win more trades, you're going to have more free time, you're going to have a higher quality of life, you're going to lock in profits, and you're going to live your day-to-day with extreme confidence. The fact that you can eliminate or begin to work towards eliminating your risk, giving you the ability to focus in on what's important, at the end of the day, really what comes down to being a successful investor. Just giving you that competitive edge. Now, what will you learn? Well, you're going to learn how to win trades appropriately and consistently and day in and day out, week in and week out. You're going to learn how to lock in profits with a very structured format. No more of this silly-willy, emotionally driven stop losses. You need to stop that because that only hurts you, okay? You're going to learn an aggressive strategy and a conservative strategy. You're going to learn the right trader system and how to trade with confidence, but most importantly, how to find trades so you can begin to duplicate the success of Christopher Pulver. The reason why you want to do that is success leaves breadcrumbs. Chris is going to share with you exactly what to do and say, just do this, and if you do that, you should see very, very similar success to what he does. You're going to receive a 4-hour live class, which is going to be right around the corner. It's going to be October the 12th. We're going to teach you 4 separate strategies. At the core strategy, which are your buy zone, sell zones, extreme zone trading, okay, precision trading, and news trading, intraday scalping. So you're going to learn 4 separate strategies. And by the way, these are extremely unique, which means you have never learned these before, and which means you as an investor will be on the cusp of the latest and greatest information, giving you that competitive edge and maintaining that competitive edge. Now, you receive checklists, manuals, how-to videos, and workspaces, as well as on-demand recordings and much more. So the Right Trader course, 4 strategies, manuals, checklists, class recordings, unlimited class reattendance, which is really, really big, active forum chat. The total retail value of this is $3,995 US. Basically, it's like a $4,000 investment. What I need you to do is I need you to ask yourself, and I need you to look at this as an investment and put your investment caps on, and just basically ask the simple question, which is, what in the world do you need to get in return to be able to make this worth a $4,000 investment? So let me just ask you, and I want you to be extremely honest. If all this package did for you was give you the ability just to make like an extra $7,000 a month, month after month after month for the rest of your life, would that be worth the investment? Yes or no? Stop and really think about it. If all this program really did for you was teach you how to appropriately and structurally lock in profit so you can turn 70% of your losing trades into break-even or winning trades, would that be worth the investment? And if all this really did was just allow you to learn the life skill so that you could just travel, spend more time with your family and friends, and maybe even structure your retirement in the next 12 months, would that be worth the investment? Yes or yes? Now, ladies and gentlemen, like I stated before, we are having our pre-launch enrollment, and we're going to allow 100 traders to participate, which really means that the first 100 traders to take action is going to receive what's called a pre-launch savings. How do you take action? It actually is a very, very simple thing. It is a micro commitment. You will have to type your telephone number into the question section box right now to reserve a spot. There is a high demand for this program simply because of the accuracy and the results. One of the things which we're going to do is we're going to incentivize you by giving you the best price up front, and we're going to give you the best value for the first 100 traders to enroll, which means the first 100 traders are not going to be paying $4,000 to enroll. Matter of fact, you're going to have a $24.95 enrollment, which is going to give you the ability to save $1,500 US up front, which will be our best savings only for 100 traders and 100 traders only. What I want to do is empower you to type your telephone number into the question section box right now, and what we will do is reserve your spot for you. We'll contact you at the telephone number in which you provided and give you the ability to make an empowerment decision on whether or not you would like to enroll. What I would like to do is go ahead and say thank you to the following traders who just typed their telephone numbers in. I would like to go ahead and congratulate David. I got your telephone number. Thank you so much, my friend. We'll have one of our education specialists reserve a spot for you. We'll also reach out to you, answer any and all of your questions. Thank you, Beth. I have your telephone number. We'll go ahead and reserve a spot for you. Thank you, Terrence. I got your telephone number. We'll have one of our education specialists reserve your spot for you. Bill, I have your telephone number. Catherine, I got your telephone number. Thank you so much. Jeff, I got your telephone number. Thank you so much. We'll have one of our education specialists reserve a spot for you. Thank you, Faye and Raphael and Arthur. I got your telephone number. We'll have one of our education specialists reach out to you. We'll answer any and all of your questions. Thank you, Terrence. I got your telephone number. We'll have one of our education specialists reach out to you, answer any and all of your questions. We'll put you in a position of great empowerment. Thank you, David. I got your telephone number as well. Thank you, Prince. I got your telephone number. We'll have one of our education specialists reach out to you in a few moments. Now, I would like to make sure that you thoroughly understand exactly what you're going to receive with this, okay? Now, what does that mean? It just means this. You as an investor will have the ability to receive fast action bonuses for enrolling tonight, which means we're going to incentivize you as an investor and as an individual to begin to enroll now. Now, what do you get that nobody else will get by enrolling now, okay? Well, you're going to receive what's known as 2 live pre-class training sessions. Your first training session will be September 20th. Your second training session will be October the 4th. Now, you're going to learn the strategies before everybody else. Now, I don't know if that's important to you. I don't know if you want to learn the 4 individual strategies before anybody else, but this will be the time, if you want to receive it, you're going to have to type in bonus, BONUS, into the question section box just to separate yourself from the crowd. You're going to receive analysis and trade setups. You're going to want to type in bonus, BONUS, to receive these 2 additional training sessions. This is your training before your training, okay? Now, this is only for the investors to begin to take action, and they enroll in this evening. I want to say congratulations, Arthur. I have you for bonus. Thank you, Tammy. I have you for bonus. Beth, I got you for bonus as well. Daryl and Faye, I have you for bonus. Raphael, got you for bonus. Catherine, I got you for bonus. Prince and Jeff, I got you for bonus as well. Okay, the second fast action bonus is something which I think is very, very powerful. You receive 3 months access to weekly live trading sessions. Direction, entry, stops, and limits are going to be provided to you. Okay, what does that mean? This means that you're going to receive a complete walkthrough and a breakdown of entry, stops, and limits. You're going to have a master trainer walk you through the live markets, mentor you, guide you, educate you with the 4 strategies which you're going to be learning, putting you in a position of empowerment, and ample follow-through and support. Everything which you could possibly need as an investor will be made available to you. What you need to do is type in bonus, BONUS, to be able to receive this. If you type in bonus, you have the right to add this on, and this, by the way, is no additional charge. It is our gift to the investors who take action this evening. Hey, Tony, I got you for bonus. Thank you so much, my friend. Alan, I have you for bonus. Thank you so much, my friend. We'll have one of our education specialists reach out to answer any and all of your questions. So here's the deal, okay? I want to make sure you as an investor understand exactly what you're going to get. So what will you learn? Well, you're going to learn how to win trades, how to lock in profits. You're going to learn an aggressive strategy and a conservative strategy. You're going to receive the right trader system and how to trade with confidence. You're also going to find trades to be able to duplicate what Christopher Pulver does. What will you get? Well, you'll receive a 4-hour live class. It's going to take place on October the 12th. You'll receive 4 strategies, the core strategy, which is going to be the buy zone, sell zone, right trading strategy, the extreme zone trading strategy, the precision trading strategy, the news trading, intraday scalping strategy. So you're going to learn 4 unique ways of viewing and trading the markets. Now, what will you get? You receive checklists, manuals, how-to videos, workspaces, on-demand recordings, and much more. The Right Trader course, 4 strategies, manuals, checklists, class recordings, unlimited class reattendance. Retail value is $3,995 US. Well, like I stated before, we're going to be giving for the first 100 traders to enroll our pre-launch savings, which will give you $1,500 US savings, and your enrollment will be $24.95. If you haven't typed your telephone number into the question section box as of yet, this is the time to go ahead and do so. When you type your telephone number into the question section box, what that will do is that will reserve a spot for you. We will contact you and we'll answer any and all of your questions and put you in a position of great empowerment. You as an investor will have the ability and the opportunity to be able to be first in line. Now, I understand that some of you in this room basically are saying to yourself, hey Josh, I don't really need to speak to anybody. I can enroll right now. Okay, so in the question section box, we have the ability for you to skip the line and sign up online. If you click on the link right now, it will bring you directly to a 100% secured online sign-up page. You'll be able to skip the line. You can see Right Trader $24.95, so your savings has already been reflected. You receive your Right Trader bonuses, your 3 months of your sessions. All you have to do is fill out your first name, last name, address, city, state, zip code, country, phone number, email address. You can get started with either American Express, Discover, MasterCard, or Visa. You type your credit card number in, expiration date, and you are done. Many investors state it takes them 30 seconds to a minute max to enroll into the program. Okay. Here are your bonuses one last time. Fast action bonus number 1, by enrolling this evening, you have, listen to me very carefully. Even if you sign up online, it's very, very important that you type in bonus, B-O-N-U-S. By typing in bonus, we will notate your account. What that does, it gives you the right to receive these bonuses when you enroll into the program. Our education specialists are watching the chat box right now. When you type in bonus, we will notate your account, which gives you and marks you on being in this presentation. If you contact us or enroll, or you contact us and you don't type in bonus, you can chance not receiving these. You receive 2 live classes before the official class. So you're going to learn how the strategies work and receive information on how you can utilize the strategies before anybody else. Okay? You're going to learn the strategies before the class. You're going to receive analysis and trade steps are shared. You need to type in bonus, BONUS, if you haven't already done so. The second fast action bonus is 3 months access, weekly live trading sessions, direction entry stops and limits. Type in bonus, BONUS, to the question section box. Now, these fast action bonuses brings this entire package to right around a $5,000 package, where you're going to have the ability and the opportunity to enroll for $24.95, which is a fantastic savings, but is strictly reserved for the first 100 traders and 100 traders only. What I would like to do is go ahead and say thank you for your trust. I want to recognize the following investors who expressed interest: David, Beth, Terrence, Bill, Catherine, Jeff, Prince. Thank you so much for your trust and the opportunity. Arthur, Raphael, Faye, we have your telephone number. We'll reach out to you, answer any and all of your questions. Thank you, James. Got your telephone number. Tori and Alan have your telephone number. Thank you so much. I'm going to leave this open here for the next 3 to 5 minutes. I want to say thank you for each and every one of you for giving us the opportunity to work with you. Stay by your phones. We'll reach out to you in a few moments. And on that note, every day, helping traders find a way. This is Joshua Martinez out.